I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are up big this morning as Japan bounces back 2.7% ahead of the Fed kicking off their 2-day meeting tomorrow. So Scott, what do you think heading into the Fed's meeting?
Well, we've had this defined range we've been trading in probably for the last 2-3 weeks, and we're trying to figure out whether it's a pause before we go higher or we'll have more corrective activity. So being up 10, 12 handles or so gets us right back to the resistance area that we failed numerous times. And we've had this random type action where one day red, one day green, one day red. That typically happens when you build a huge wedge type pattern. So everyone gets frustrated before the market picks a direction. So try not to get frustrated. I think that we do have levels to trade against, and obviously a big event coming in on Wednesday.
Exactly. Yeah, let's map out those levels though and show us what ones we should be watching.
Well, if you take a look at the visual here, the chart of the SPX, you will see that, big time trend since November. We tested it right here. We tested it again in early April. That's when we held the 50-day and then resumed and busted out to that May 22nd outside day reversal. A time to take some risk off, clean up some loose longs, maybe even get a little net short. Then you remember we had this little micro wedge, a micro wedge that was put in place coming into here. Remember we talked about 1640, which was very important on the SPX. We resolved it on that Friday, came in, got to the 50-day, bounced off it pretty strong into this resistance. Last Thursday, tested the 50-day again, which this time was a little bit more surprising that we held, and now we're right back to resistance. So I would say resistance-wise, you have 1640. That's a level we failed out Friday. This is 1648. So right here, if we close above this line and you are net short and you're not just say convinced or you don't have conviction for a longer term, I would be a bit careful there. If you're coming in flat-footed like I am pretty much today, if we can go sideways here and break and close above it, there are some quality longs out there to take a look at as they held in very well during the corrective phase.
Right, so let's take a look at some of those sectors. I mean, we are always looking for clues in this market, and the financials were weaker on Friday, but they did continue to hold up, and this is a sector that we often look to for clues. How can we look to that group today for clues about today's action?
Well, on Friday when they went red, it showed you that, okay, we're not going to have much continuation to Thursday's strength, which was just another back and forth type scenario. So if you look here, you will see that it closed pretty weak, okay, for the day on the lows. So, when things close weak, people tend to gravitate towards them when they open up. So we'll see what type of action we have in the financials. So we're probably opening really close to this resistance, 1983. If it gets back above 1983 and holds above it, I think that the market's going to have a hard time selling off. If we open up positive, start to go through Friday's low of 1951, then the 50-day comes into play. So you have like this little inside range in this overall, to say, this is, I wouldn't say a macro wedge, but just a consolidation phase after an enormous move. So overall, still very healthy, but it's good to look here for some type of clues.
Now, how about retail? The RTH has had trouble breaking above short-term resistance over the past few weeks, but it's managed to hold above the 8 and 21 days. So what do you think of the composure of retail?
Probably one of the strongest groups now out there. A lot of the other groups just came off the 50-day. So for this group to be above the 8 and 21 day, that's where you're seeing some leadership. And if you look here, you will see the trend remains intact. Even a lot of the intermediate ones, you look at the 50-day, didn't get there. The first time the spiders did in here, didn't even think about retesting it. So it is pretty strong, probably opening up today. So I would say look to this group that if it starts to get some power and you see some power in the leading groups, then you'll know that this corrective phase, is going to be shallow like it's been shallow most of 2013. And
what about the IYT? It did hold above the 100-day on the last pullback and now is trying to hold above the 50-day. So trying to act better.
Trying. This group I feel like just needs more time. It went red pretty much first also with the financials. If you look here, many times over the course of this just a rally, it's created some of these in these inside head and shoulders pattern. This one looked like it was going to break finally and didn't. then it resumed. You could look and draw another trend line here where it started to put another head and shoulders type pattern, but these patterns only trigger when they go below the neckline. So if you look here, this now is the left shoulder, here's your upper head, and then here's the potential of a right shoulder. So with that said, still trending, and it's still, every time it finds support, it's almost where, the bears are really hoping for the break, and it doesn't happen. You had a small, upper one right there, but that's all you're getting is these accelerated little areas break to the downside, but then the intermediate ones hold. That's why it's very important to also know your time frame. So far, Friday, you had a little bit of a reversal into resistance, so I would see if it holds up today. Overall, though, you look at all these lines, it's pretty erratic here, but overall, the macro trend still is intact. It's just not really showing power. It's in a bit more of a wait-and-see mode if you're an intermediate guy.
Yeah, you can really see that with all those lines right there. So, how about the home builders? Did have a pretty nice bounce off of its trend line. Would you look there today?
Yes, and this one was really close. This one was like, oh my goodness, is it going to finally break this line? The Bears like, yes, we got them. And then boom, we bounced off it. So if you look here at the home builders, which have been a leadership spot for a while now, like look at this trend line that's been in, I went further back than, the November trend line, and it's still intact. Got really close right here, really close right there. So overall, if you're a macro investor in the home builders, you haven't really sweat. You look at this intermediate range, like, if you're very active, okay, this was a spot that you could have got out of, but then it held. Here again, little spot broke, but held. Then here again, little spot broke, but held. So now at this point on a micro level, see if it holds, the majority of this big potent bounce, which comes around 30.46. If it doesn't, then maybe it turns lower. So at this point, again, you just got to know which part of the range you're trading in. And as of right now, it's out of the danger zone, but I don't think it's going to have the power to start just taking out Friday's highs and getting back to the the 2013 highs, but we shall see. Each time it's broken down, it's just went right back up. So at this point, you got to be neutral in the home builders, and if you're committed to it, stay with it because that macro trend holds.
Right. And the utilities have been a lagging group. What level do you say needs to get back and close above to interest buyers?
This one it's kind of like a catch-22 because they do give you yield. But now rates are like slowly going up, so there's not much growth there. So that was the hot group in the first quarter. Now it's barely trying to struggle to hold on to the 200 days. So everyone's like, okay, we've had all this rotation in the market. Maybe rotation comes back here. And if you didn't chase this up move, and when it broke here, you sold your stocks because look, you had the break below, the retest, then you had this bear flag, and it broke again. Now you're like, you know what? I have the luxury of buying back around the 200-day. It's trying to hold here, but this is a laggard group. Some monies might be looking for some value here, but if you're trying to play high beta, you're trying to play momentum, you're trying to, buy high, sell higher. Right now, this doesn't seem like that group yet. But overall, if you want to be long versus the low here, you could give it a try, especially if you sold some strength here or on this breakdown right there.
All right, and coming up, we're going to go in the trenches with high beta tech, where there are some real standout names. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, where two of the names that we've talked about as real standouts in the group as of late, Google and Amazon. Let's start with Google, still best in breed.
Yes, and someone in my actual trading floor said they saw somebody on the subway wearing the Google glasses. I think they worked for them because I don't know if it's out there yet. Have you seen anyone wearing them yet?
I have not seen anyone in person wear them. I've just heard about them and read articles, but I haven't seen anybody wear them.
Well, who knows? Maybe the products are coming close to getting out there and getting on, in the shelves. But anyway, stock itself is acting best in breed. If you look here at the chart, you will see that, this was that descending channel back in April, which gave you an entry right when it broke above and held above. And that was the run from 800 to almost, 920. Then this upper flag broke to the downside. So if you were riding that trend, good spot to get out of the way, just in case. And then came all the way down. Here was that red dog reversal on June 6th, just like the market. Then you had that 3-day move into resistance, into that 890. And then, it held where it had to. Look where it held on Thursday. Higher low. Okay, so now the question is, can you get momentum? So in order for momentum to come back, it's got to get above 885. If it gets and stays above there, maybe you get involved if you're not involved yet. And then once it clears this 891, then it could put the old highs back on its site. So, leaders like this, if momentum comes back, that gives us some clues that the direction can continue, because you need, if you're going to go to the upside, you need leaders to lead. So this is something to look at.
Potentially leaders like Amazon, which just like Google has been best in high beta tech.
Yes, and if you look at Amazon, we talked about it, a week ago, where it gave us a nice trade, but the market wasn't strong enough to let momentum stocks, show momentum. What a quinky dink. Anyway, you look at the chart here of Amazon, you will see that, here you go, you get another chance. This was that 2-day breakout move back to the historic highs here of 284. Okay, then it pulled back to where it broke out from and it held. It didn't fall back into the base. It didn't fall apart. So now at this point, question again is, can leading stocks lead? And if they can, that shows you a healthier environment. So one little pivot here is right around this 278-ish. If it were to get above 278, then you have that high of 280, 250 to 284. So again, if they let stocks like this break out, then you know that there are some leaders to go to, and that perhaps the corrective activity in the double bottom of the 50 in the S&P is all we're going to get.
Yeah, and then you take a stock like Netflix, which had been in a corrective phase but perked up a bit on Friday. Perhaps this could be one to look to today. They just announced this morning, there was the news that the company struck a deal for the largest online content deal to date.
Yes.
So
they're
definitely
definitely breaking ground.
Right.
They're creating new areas of the market to look at, and the stock's been performing this year. It's been in a corrective phase. Some caught some action to the downside. Then if you recall, last Thursday we had that red dog reversal, which some people get long versus that low, and if you did and you took it, you're excited today. The stock's up 7 points or so. So if you look at the chart here, you will see this was the small top, that outside day, and then here was when this upper range broke to the downside. This was a wide range bar, and then it tried to break into this gap. Remember, some guys, that's why you have to know your time frame. This was a little mini short here, but then look what happened on that Thursday. It held the 50-day moving average, which leading stocks tend to do. So let's take a look at that closely. Okay, right here, it broke briefly below 206.87. Okay, and then on this day went as low as 205.75. So not even $1 worth of risk for a strong close, little inside day, but still held it, and now it's opening higher. So with that said, I think for this trend to get back to the upside, any kind of close above 220, 221 could set this back in motion. I still think there's a lot of shorts in here, and then we could see some leadership back here. Overall, it's been a pretty defined downtrend and very controlled. And then this is where, it gets interesting right at this line. So, up 7 points today. If it, the first half an hour, it holds up 5 or 6 of those 7 points, chances are you can get some kind of continuation and that downtrend will be broken.
Right, so definitely one to watch today. But then on the other hand, we have Apple still looking weak, closed below the 50-day for the first time after a few weeks.
Yes, and I'm sure there are some people, short, because if you're a technical trader, a stock gives away their 50-day, especially a weaker stock. So they're coming in today saying, what do I do? So they'll want to see if Apple can go red first, which it has been doing. So with that said, you look at the chart here, remember these two conflicting patterns? First of all, this is the move from 700 all the way down. I know we caught a few different longs along the way, but every time it bounced, it failed. Remember this red dog reversal? This was actually, a nice potent one. Failed right here. This was to start 2013. This gap up we traded against, failed right there, and then lo and behold, we remember this decent trade through 420, that found up, meeting resistance around 460. So the question was, what pattern will prevail? So you look here, this could have been an inverse head and shoulders, which it still might be. Left shoulder, head, right shoulder. But then short term, you had this ascending channel here that it broke below. So that's when I, turned from the A list of Apple probably back to the B and C list, which was right around here. Then it retested it on that day of the developers conference and been slowly going lower. I would say here is your support. It's got to get really back above 437 to 440, or do something pretty terrific here. It has to have like one of those really big days and stand out in order to get some people like me back interested in it for any type of size. If not, you know, if it opens up $2-3 today and doesn't hold the 50-day, which now is 435.40, chances are, you know, the shorts might get more aggressive, and then 428.50 was that last pivot support that it saw late last week.
All right, time for some quick hits. Let's talk some Elon Musk names and Tesla, which closed above 100 for the first time in quite a while on Friday.
Yes, and it was upgraded today. The stock's been acting very well. You know, I sent out a thing on Twitter. I said, send me 5 stocks that you would like to own for the next week, okay? And then I got like 30 different tweets of 5 different stocks. I would say that Tesla was probably one of the ones on there the most, but then so if you were one of the guys saying, I want to be long Tesla, but you're like, okay, I didn't go long it because of the risk, you know, it's going to be an exercise we continue. But anyway, you look at the chart here, you'll see, you know, it is above the 8-day now. It held the 21-day. Here's some defined resistance. If it gets above this 102.50, 103, which it might be opening above, everyone who's still short, there's still a high short interest, you know, would get a little worried. And then the only point of reference, you have a micro one right here at around 109.54, and then a massive one at 114.90. So, you know, you had some chances to cover your shorts here, you know, into the 21-day, this 3-day down move or so. So, you know, hopefully you got a little bit more neutral as it was closed back above 100, and now, you know, 103 is going to be another action area, decision area.
Well, a natural transition from Tesla to Solar City, which had its big lockup and had it last week after a big move lower.
You know, there's like an art to trading these lockups. When everyone knows a lockup's coming in like a month or so, it starts trading lower. As it gets closer to the lockup, people don't understand, like, oh, I got to get out now, or let me get short now. But if the stock doesn't go down after the lockup, chances are those people who didn't cover their shorts get worried. It creates an actionable trade. So last week, midweek, we talked about, said, you know, if Solar City can't go down anymore with the big short interest and the lockup being done, chances are it's priced in and you could probably see a move, you know, back up or a nice snapback. And now you look at the chart here, you'll see, you know, this was the day it failed at resistance, and this was as high as what, 51.36? Now this is when it broke this upper triangle, so that was your short trade. Okay, and then, you know, we came into the lockup right around here. It traded below. Remember, we were trying to think of if we can get a red dog reversal at 35.50. Well, traded 3 days below, popped back in on that Friday. So maybe that was your, you know, flag to get long or at least cover some of your shorts. And now it's opening up a bit today. I would say easy spot is 40, maybe even tries to get to 42-ish. So, you know, if you did get long into this, you know, trim and trail it. If you're still short it, you know, just make sure you watch the price action, because, you know, when these lockups happen, they're not just layup shorts, because typically they already just came in a lot, and it's a little bit more complicated than that.
Right, yeah, a little trickier. How about Hewlett-Packard, which did hold above its 8-day on Friday? You think higher prices are in store here?
Well, I think Goldman came out and downgraded them the same way. Remember way back before the Intel Microsoft run, they downgraded them, which I'm not going to get into. But anyway, it held up into the Goldman downgrade after that big Vegas event. You look at the chart here. Overall, it still acts pretty well, right? Look at this, you know, huge gap up. That was on that earnings report. It did not fall apart on the Goldman downgrade. So I would say if you're long Hewlett-Packard, still above the 8-day, not even at the 21-day, still showing signs of strength. Okay, and if it were to get above 25.50, it can continue. Again, I know everyone doesn't love the PC sector, but take your love or your likes out of the market and look at the charts. And right now, this chart continues to act very well.
And Goldman Sachs had a strong bounce on Thursday, did give back some gains on Friday, but still hanging above the 21-day. So what do you think about the composure of Goldman?
I just think that, you know, it tries to act strong, and then when the market gives way, it's like, okay, maybe I have to just sell my Goldman. And then when we get, you know, when we get some footing back, everyone just flocks back to it. And some of the banks aren't, you know, acting as well. So if you look at Goldman, we want to see what happens here. This will be interesting today, because it's still like a pebble throw away from the highs. Okay, it's still above the 21-day. It closed on the lows on Friday, which is not that big of a deal considering what some other things did. So today, it's probably opening up with the futures. If Goldman were to go red today first, you might see some weakness in the banks, and you might see some of this upside gap not hold. And then here's your 21-day, which has been holding, you know, all the way back since April. So, you know, I would watch that, and I can give you some clues on whether or not today is a gap and go to the upside, or a gap into resistance and just type of rangy, maybe, you know, even sell-off type trade.
Well, we talked a lot of names, a lot of potential setups today. The first trading session of the week, of course, and before the Fed kicks off its two-day meeting tomorrow. So what will you be focusing on as you head into the session today?
It's really, those levels that we talked about. We've had this upper wedge that we've spent enough time navigating back and forth. At this point, I think a lot of people went out on Friday maybe neutral to negative. So if you came in short today thinking or cheated, this is the thing. If you have conviction, okay, and you start getting in a trade before it ignites and before it goes in motion or before a pattern resolves, all right, you're getting ahead of the curve trying to get paid to do that. So if you come in and it's against you, then you have to have figure a way around it. So for me, I know that on Wednesday I had a little short on the brain, and then Thursday's move got me thinking, okay, maybe I want to buy some strong stocks. And then Friday I'm like, you know what, I'm just going to go into the weekend flat. If those of you took out shorts saying, okay, we were down 100 on Friday, I know we're going to test a 50 and this time break it, and you come in short, you just drop some of your opinions, because if you go back to just say that we'll do the spiders, if the spiders were to close above here, okay, because this is still neutral. This is still neutral. If you're really short, that means you're thinking short and your conviction to yourself is short, because the pattern hasn't resolved to the downside and we're still very close to the highs here. So anyway, this 164.67-ish should be a line in the sand. If we get a close above, just say 165, you should take some off unless you're willing to and risking it to hold for a longer period of time, which a lot of people have been doing during this entire process, and they failed to recognize this pivot area that was just a small corrective phase and this one. So here it is again, another corrective phase. Don't have opinions, let the levels show you the way.
And with that said, happy trading, everyone. Have a great Monday.